Hey everyone, welcome back to Corporate Decoder, the place where we decipher the corporate world. Today we're diving into Beam Therapeutics' latest filing, and let me tell you, it's not just about gene editing, we're getting a peek behind the curtain to see where their money is going. Beam Therapeutics is getting ready for its annual meeting of stockholders in June. This means they're asking their investors to vote on some important decisions. We're going to look at what those decisions are and what they mean for the company. First, stockholders will vote to elect three Class 2 directors, Mark Fishman, Carol Ho, and Kathleen Walsh. These directors will serve for 3 years until 2028. It's like choosing your team captains for the long haul. Next, they're asking stockholders to approve Deloitte & Touche as their independent accounting firm for the year. This is like double-checking the company's math with an outside expert. Then comes a vote on executive pay, specifically the compensation for what they call named executive officers. These votes, while not binding, show what the stockholders think about how fairly the top dogs are being paid. The board is recommending that stockholders vote for all the proposals, electing the directors, approving the accounting firm, and approving the executive compensation. It's like the team captain saying, "Trust me, this is the best way to go." Let's look at who these board members are. We have Graham Cooper, who has a strong financial background in the life sciences industry. It's good to have people that know their way around money in top positions. Carol Ho, who's a chief medical officer with a background in neurology. Her expertise can be important when making medical decisions. Kathleen Walsh, she has extensive experience in the healthcare industry. Her insight is helpful to understanding the market landscape. The Nominating and Corporate Governance Committee is responsible for finding qualified people to be on the board. This committee makes sure that the people nominated have experience, judgment, and can help the company's business. Now let's move to the executive officers. These are the people who run the company day to day. We have John Evans, the Chief Executive Officer, Christine Ballon, who's the Chief Legal Officer, and Amy Simon, who is the Chief Medical Officer. Let's get into the juicy stuff, how much these executives are making. This section breaks down the compensation philosophy, which is essentially pay for performance. They use a mix of base salary, annual bonuses, and long-term equity incentives. It's about balancing immediate rewards with long-term growth. Base salaries are meant to attract and retain talent. These numbers get reviewed every year, looking at how the executives are performing and what's happening in the market. For example, John Evans, the CEO, had a base salary of $715,715 in 2024. Other executives like Giuseppe Ciaramella and Amy Simon also had healthy salaries. Bonuses are tied to hitting company goals. They outline what they need to achieve for a bonus. The goals are clinical research, manufacturing, and financial targets. Equity, like stock options and restricted stock units, RSUs, is there to encourage executives to think like owners. It's all about getting them invested in the company's long-term success. Here is where we see all the numbers together. It shows salary, stock awards, option awards, non-equity incentive plan compensation, and all other compensation. So we can easily see what each person is getting. For example, John Evans' total compensation in 2024 was over $6.4 million. It is important to understand that a significant part of this income is in the form of stock options, which means he has to stick around and make that company grow to make real money. This table shows any stock options or stock that haven't vested yet. It also shows the expiration dates. It shows how much skin everyone has in the game and when they can potentially cash in. For example, John Evans still has hundreds of thousands of unexercised stock options. This ties him to the performance of the company. Let's talk about the pay ratio. This is the ratio of the CEO's pay to the median employee's pay. It's meant to show the pay gap within the company. Beam's pay ratio is about 25-1. This means that the CEO makes 25 times more than the average employee. The compensation committee reviews the executive pay and makes recommendations to the board. This committee is made up of independent directors, and their job is to ensure that pay is fair and aligned with company goals. Board members are also compensated for their service. The compensation includes cash fees for being on the board and committees, as well as stock options. This is how they are rewarded. Graham Cooper, for example, received total compensation of $450,245 for his service as a director. Moving on, the audit committee oversees the company's accounting and financial reporting. They ensure everything is accurate and transparent. They also pick the company's independent registered public accounting firm. The audit fees paid to Deloitte and Touche L in 2024 were over $1.2 million. That's what it costs to make sure everything is legal when it comes to accounting. Now let's take a look at who owns the company. It's important to know who the major stockholders are, as they have a significant say in the company's decisions. FMR LLC and affiliates are the most prominent holder, owing 10% of the company. ARK Investment also has a significant portion of shareholding, around 7%. This information is very helpful as a large part of the share price comes down to decisions that these parties make. Finally, shareholders need to send in proposals to the Secretary by December if they wish to be considered in next year's proxy statement. So if there's something they want to change, they have to follow those rules. So what's the big picture here? Beam Therapeutics is a company making key decisions about its leadership, accounting, and executive pay. Stockholders are being asked to weigh in on these matters, and the board is recommending they vote in favor of their proposals. All those stock options and shares really make a difference. The leadership team will be very motivated to build a brighter future for the company. Now, looking at these results more broadly, the health of Beam depends on its early stage pipeline and ability to keep enough cash for the pipeline. All eyes will be on the results from clinical trials. Thanks for watching. If you found this interesting, remember to subscribe, like, and comment.